All right, folks, welcome to Investing for Beginners podcast. Today, Andrew and I are going to take a look at earnings calls and reports. We're going to talk to you about what we look for when we are listening or reading an earnings call from kind of two different perspectives. One, if the company is new to us, and likewise, if the company is familiar to us, and how we kind of approach that. So, Andrew, let's dive in and start talking about earnings calls and what they can teach us. And maybe let's start with the basics. Like, what is an earnings call and a report? Why is this important to us?
Companies that are regulated by the SEC, so those would be your trades on the NYSE and the NASDAQ, they have to file what's called a 10K, and then they also have to file a 10Q. So the 10K is an annual report, and it tells you what happened in the business. So what the SEC wants is they want to make sure that people aren't just saying whatever they want about their company and just trying to get money from investors. So the SEC, in theory, is there to protect people like us. So they require businesses to disclose certain things. And it's pretty templated, so every business has to kind of meet that standard, meet that bar of enough information where the SEC feels like investors can make a decent decision on whether they want to invest in a company or not. So things like what kind of a business overview is there, things like risk factors, things like the actual financials, what are the actual numbers behind this thing? And those have to be audited as well. So that's the 10K. The 10Q has that as well, just a little bit lighter of a version of a 10K. Not a little bit, a lot. And you know, 3 of those go out a year, and then the 10K is on the fourth quarter. But those don't have to be audited. And then when it comes to earnings calls, those are actually optional because there are companies that famously opt out of doing earnings calls. So when you look at the difference between a quarterly report, which you can look at it like a 8K or a 10Q, these things that are filed to the SEC, you could kind of template that and kind of use a similar checklist, but you can't do that, or you would have difficulty doing that with an earnings call because earnings calls can be all over the map. I'll give you another example. Elon Musk, at some point, I don't know if he still does this, but he was like, he had the Wall Street guys on his earnings call. And then at a certain point in the earnings call, he was like, your guys' questions suck. This is really boring. Can I get anybody from the audience? And I think he just took random questions from just random people. So the earnings calls can be different, but the reports are pretty structured. And so with that kind of context in mind, it helps frame what I look for when I'm looking at either a 10K, a 10Q, or an earnings call.
That's a great overview. Do the reports come out on a regular scheduled basis, or is it just kind of random when they're gonna shoot one out to us?
Yeah, I mean, they will schedule it close to the time. So like you can look, what did they do in 2024? And then they won't necessarily always do it on the date after. Where you do have to, which we've talked about on the show before, where you do have to kind of pay attention to is if they have a late filing. So they'll have some timing deadline that they have to meet. They don't meet that deadline. Could a lot of times where there's smoke, there's fire in those cases, in that particular case. So they do have to make a deadline. But I've noticed with majority of companies that I've looked at, it's kind of all over the map, as in, okay, it's February 14th this year, February 13th this year. A lot of times they'll be pretty good at scheduling earnings calls in advance, but I won't be able to know if it's Q1. I won't be able to know what's Q1 next year's earnings call because they just won't tell you. So you have to guesstimate a little bit. And that can be frustrating, or you just have to wait for a couple weeks before when they finally schedule it. But
Right.
yeah, that's definitely a frustrating part of it for sure.
Yeah, it is. It is for sure. There's been times when I've been looking at a company and maybe you're thinking about writing something about it, but you want to make sure that you use the air quote most up to date information, and maybe according to last year's schedule, schedule. The company was supposed to report on September 6th, like today. And then you go to the company and you're like, where's their quarterly report? And then you see in a schedule, it's not coming out till the 22nd or something. You're like, oh my goodness. So you got to wait.
Yeah.
And so,
Yeah.
it's within I think there's a time frame that they have to do it within, but it's kind of a floating date, so to speak. So, like to your point, if it was February 14th last year, it may or may not be on February 14th the next year. So, just an FYI for that. I know that there are plenty of websites, and especially on social media, there are places that you can go to kind of keep track of when things are going to be updated, so you can kind of get a sense of when these are all coming. There's usually an earnings season, if you will, that starts usually with the banks and the big banks, JP Morgan, Wells Fargo, et cetera. And then it just kind of filters over the next month and a half to 2 months where you see the vast majority of them. And then there's Costco, which is always a laggard.
Right.
which is always a laggard. But yeah, so the timing can be a little all over the map. But once you really get into a routine of reading them and following them fairly regularly, then you'll be able to start kind of noticing the patterns and have some sort of clue. But sometimes it is nice when you don't have 17 companies all reporting in a week, and they get spread out a little bit, so you can try to take the time to consume the information. The earnings calls, like Andrew said, are wildly unpredictable, and depending on the company can be even more unpredictable. And they two of the ones I know, there might be, I'm sure there's more, but Berkshire and Markel, correct, are the two that do not have earnings calls.
I think also the crap. There are more than just them.
Yeah, there are.
Yeah.
I guess the kind of thinking about it, Constellation Software in Canada does not do those either, and they just basically they only release 2 reports a year, I think, an annual and a 6-month or something like that. So don't hold my feet to fire on that, but they don't communicate a lot either.
Well, they're not traded on a
No,
SEC regulated exchange.
No, they're not. No. Yeah, very good point. Very good point. All right. So let's say you come across a company that's new to you that you want to start learning about. How would you approach looking at the earnings, either call or the report that you would get? What would be some things that maybe you would pick out that you'd want to learn about said company?
I tend to look at the report less and the earnings call more when I'm first investigating a company, because I want to fill in any gaps of knowledge that I might have at that time. You don't know what you don't know. And so ideally, if you are investigating a company and you don't know it very well, hopefully you haven't made up your mind already that you're going to buy it, which is a classic beginner mistake. But hopefully you're in this information gathering mode and you're just trying to put all the facts together. So earnings call can be great for that. Something that I have done in the past, jury's out on whether this was the most efficient thing to do or not, but I would look at a company, a brand new company, and then just have the earnings call on in the background while I'm driving around or something. And then as I hear things that are interesting, kind of notate it in my mind, and then go back and read the transcript more intentionally to really focus on those parts that I had picked out. It can be it's more boring to listen to an earnings call than a podcast. And my daughter can attest to that, because she has pointed out to me how many times it is definitely not the most polished content that you could listen to. So with that in mind, like, I find myself kind of drifting in my mind a little more when I'm listening to an earnings call than something else. But there can be some benefit to that too, because it could trigger something in your head, and then you start thinking about competitive advantages, and you could get some deep thoughts out of that too. But I guess I take a pretty laissez-faire attitude to the earnings call. What about you?
Yeah, I probably do the same thing. And I love to listen to them when I'm in the car. I also love to listen to them when I'm on walks. I find, frankly, shockingly, that I learn more when I'm on a walk than when I'm driving, because My attention is not distracted. I don't have to think most of the time about walking, so I can concentrate on the earnings call itself, and so I will do that. I've also noticed that, well, for a company that's new to me, I will definitely listen to the whole thing. I will listen to the management commentary as well as the questions that the analyst ask, because I think those in combination could be very illuminating when you're trying to learn about the company. And a lot of times, if it's something that's a little more technical, so I'll just throw out a company, cloud Cloudflare. I don't really know much about the company. I don't really know about the tech, and I may not understand the acronyms that they're throwing around in the call. And so one of the things I'll do is I'll make notes of those, and when I get home, then I'll look them up and what is this thing they're talking about? Annual recurring revenue, what is that? Or dollar-based retention ratio, like what is that? And so I'll look those things up so I have a better understanding of that. I go back and forth, honestly, on whether it's better to listen to the call or read the transcript. Sometimes I feel like I learn more about reading the transcript than I do to just listening to the call, but I think you can learn a lot from both. And so I kind of vacillate back and forth. And sometimes when I'm really feeling dangerous, I will listen to the transcript. I listen to the call while reading the transcript, so I'm getting reinforcement from the words going by, and that motion on the screen makes me focus more instead of drifting off and started thinking about something else while I'm listening to the call. So that's kind of what I start to listen for. I'm a big fan of listening to the tone of how management speaks, not only the words that they say, but the tone that they speak in, as well as how they answer questions from analysts. Most of them are fairly friendly or at least neutralish. Occasionally, you'll run across people that are very gruff and maybe are a little more aggressive towards the analysts and how they, or even their own coworkers, and that has turned me off. I remember very vividly going on a walk, and I heard some papers rustling in the background, and then the CEO stopped in the middle of a sentence and said, "Who's doing that? Stop it now!" And I was like, "Okay, we're out. I'm done. If that's the way he's going to treat his coworkers, CFOs level people, nah, I'm not interested."
So, how does the process change for a company you already own then?
I think for me, for a company that I already own, I'll use Visa, my time tested company that I like to refer to. I generally will not listen to the management commentary unless I read something that is noteworthy. Uh, Mostly because I don't feel like they're going to tell me anything I don't already know, and then I'll listen to the analyst calls because usually the analysts, albeit they're not generally very.
Man, I'm an overconfident investor, I guess. I don't really listen to them much. I will spend a lot of time on the front end and then not so much on the back end. So, I mean, that keeps me out of a lot of innovative tech, and that was the path I had chosen.
Well, I mean, that makes sense, right? If you're if the majority of your portfolio is in slower moving type businesses, then you probably don't need to stay on top as much of the companies. And I'll just throw an example. Let's say that you invest in Home Depot. You don't necessarily probably need to stay on the cutting edge of everything that Home Depot does, but maybe a company like Trade Desk, you do, because there's so many moving parts and there's so much going on with the technology, and it's changing every day and how people react to it. And so those are things you need to be more on top of. So, I mean, it makes complete sense to me.
Yeah. What about the 10Qs, the reports, 8Ks, the press releases?
Right.
How do you handle those?
The press releases, most of the time I ignore completely, probably to my own detriment. I do look at the 8Ks, especially around um, like 10 10Q or 10K time, because you can start to see they'll start to show maybe the whole year's worth of numbers. Maybe they aren't audited yet, but they're at least giving you a preview of what you can expect. And that can be very, very helpful. And that is actually something I picked up from you, because you were the one that talked a lot about 8Ks and how much you can learn from them. Prior to that, that was not something that really entered my ecosphere much. The 10Qs, I will read them most of the time. It depends. So if it's a new company, I'll read the whole thing. If it's a company that I'm familiar with, let's say Microsoft, I may only read the management, the MD&A part of it, and just kind of go through there and look for things that, to see if they're still on track. One of the things that I've started doing is trying to take notes about things that I think are important, like KPIs that are important, and I want to hear what Satya Nadella has to say about them. Like, how's the cloud doing? How's AI doing? How's Teams doing? How are their 365 seats doing? Things like that are important to that business. Then I will look for those clues to see if management, or i.e. Satya, is talking about them. If he's not, then I either have to conclude that it was negligible or they're hiding something. And so that could be a air quote note to look for either in the 10K or an earnings call or something else down the road, to make sure that maybe something isn't going off the rails and the company's not telling us about it. I'm not saying Microsoft's doing that, but it's just an example of what I will try to look for.
That's a really, really good nugget. You'd be surprised how often that happens once you start kind of noticing it, and you're like, oh, interesting. The rest of the report looks kind of bad. And oh, would you look at that? That KPI kind of disappeared.
Right.
So it can, I think it's a great yellow flag signal.
Yeah. Yeah, for sure. For sure. I know recently Netflix stopped reporting number of subscribers, and I think that one was pretty obvious. But sometimes the companies there will be something that they talk about regularly, and then all of a sudden it disappears. I remember specifically PayPal was talking all about how many users of the platform they had, and then all of a sudden they stopped. I'm like, what happened? Why did they stop reporting that? And then the next earnings call, the analysts, like, not everyone, but pretty close to everyone, was like, where'd that go? Why aren't you talking about this anymore? And then management kind of stumbled over that, and it was kind of the start of the demise of the company as far as like the stock price at that point, because people felt like they're hiding something from investors.
Yeah. Interesting. There's probably countless examples, right?
Oh yeah, for sure. Yeah, for sure. So like when you're thinking about like the kind of the information that you can gather from these reports, like how much weight do you put on them? I know you said you're not always current on the reading of them, but if you are paying attention to it, like how much weight does that carry with you? Is it, negligible? It's like, okay, if you let's throw out a hypothetical. Let's say you're looking at a company and some bad news comes out about the report. How do you handle that? How does that enter the brain and the process?
I find it hard to answer that one. I'm curious how you handle it though.
To date, it has never caused me to sell. Whether that continues or not, I don't know, but probably not. Generally, if I hear bad news about something, so to go back to PayPal's example, when I noticed that in the earnings report and then I heard it in the earnings call, that certainly was a red flag. And so it was something that I made a note of. And so when the next earnings release came about, I wanted to see A, how management handled that, and B, whether any analysts continued asking questions about that. And I noticed that their management did address it in their opening remarks pretty much from the get-go. And they tried to kind of talk everybody off the ledge, so to speak. Basically, they were saying that they were changing, they were kind of doing a pivot on their business model and how they were thinking about what was best for the company and shareholders and information and yada yada. And I think one or two analysts asked them questions about it, but it was pretty minimal. But it felt like the answer was a little too late, and it felt more like a PR response after something bad happens, as opposed to a heartfelt like, yeah, we screwed up, we should have communicated this earlier, here's what we're going to do now going forward. It just it didn't ring true. So that again added another red flag, and that's when I started seriously considering, bailing from the company. And it took me a little while before I actually ended up, reducing my shares, the position. I still own a very small amount of it, but at the time it was very troubling. And then when you started to see the financial performance suffer, then it was just kind of icing on the cake. Okay, all the things I was worried about are starting to show up in the financials. It's probably time to make a change. So in that respect, it definitely had an impact, but it wasn't an immediate sell. And so usually when I listen to this stuff, or it's a company that I already kind of know, then I will make notes of something, anything that stands out, and try to refer back to those when I'm listening to the next earnings call, or if I'm reading something about the business. You know, I'm I won't speak for you, but I know when you read a lot about the company and you spend a lot of time learning about the business, and then you own it and you're kind of refreshing yourself every so often about the business. Sometimes I feel like my eyes can gloss over the words and like I read the words like my eyes read them, but my brain doesn't necessarily connect all the time. And so for me, I find that if I have these little notes, I use Google Keep now, and I make little notes of the companies and things in the companies, and I put dates on them. And so when I am listening to FICO and their earnings call, I don't own the company, but when I'm listening to their stuff, I'll go back and look at those notes and go, okay, did they talk about this? Did they talk about this? Did they talk about this? And I will admit I will use the Control F function sometimes if I'm in a hurry, and I'll use that to scan through either the 10Q or the transcript to see if there's any information about those kinds of things. So it could be helpful to scan the things that I feel like are important without having to listen to some of the gobbledygook that they'll spit at you.
Yeah, let's talk about tools. So hang on a minute. The Google Keep. What is that? I've never heard of that.
It's Steven, our friend Steven, who works with us.
Yeah.
He's the one who clued me in on this. So I used to use Evernote as my note keeping device, and now since we use Google for just about everything, yes, the overlords, we are fans. They they have this note keeping app, and it's, if you have Google, if you have the Google products suite, it's called Google Keep, and it's similar to something like Notion or Evernote. It's not as robust as those are by any stretch, but it's a real good place to keep notes of things. And you can make your own categories, and you can keep track of, for example, I have one that just says stock research. And under that, I have all the little notes that I've kept about companies that I've either been interested in or own, or have found something I want to remember about it. And then I just make a little note in there, and then they're searchable. So you can search, okay, FICO, and anything you've written about FICO will pop up, and you can read through that kind of stuff. I mean, you can use it for many other things other than that, but that's one of the things that I found. And you can access it on your phone, which is nice. So, for example, if you're on a walk and you're listening to an earnings call on Quarter, for example, then you can whip out your phone, pull up the Google Keep app, and you can keep a note on there. Of course, you can use the iNotes thing, but I moved away from that a long, long time ago.
Yeah, that's cool. And I bet it's fast. Like it
Yes,
might not be robust, but I bet it's
it
fast.
is. Yes, it's very fast. Yep. Yep. I will admit sometimes it's a little laggy on syncing, like with your laptop, for example, but it's very quick to open and pull up and find exactly what you want, and then be able to access the information and keep it. And you can also add links So, for example, if you have access to the transcript, you could download it and you could put the link in there so you could actually access it that way. You could do videos, you could do audio recordings, a podcast, perhaps. You could link there to that kind of stuff. So there are different things, tools you can do with it. But like I said, it's not as robust as something like Notion, for example. But I also feel like the learning curve on Notion is I have to have a PhD in to be able to use it. But with Google Keep, you can literally, it's like, open the wrapper and you can start using it right away. So I found it very helpful.
Love it.
Yeah.
And I bet the only reason that the sync is an issue is because you're just wearing the tread on those tires. Like you're in there furiously
Right.
just filling up those sheets. Love it.
Yeah.
Okay, so let's go to the earnings calls themselves and then the reports, the transcripts, things like that. What tools do you use for that? I know you mentioned Quarter, but if somebody just getting in earnings calls for the very first time, break some of that down for us if you would.
Okay. Quarter. Well, there's probably, I mean, the two main sources that I use. One would be the Quarter app. It's a free app that you can download on your phone. You can also download it on your computer, and it allows you to access the transcripts of the calls as well as the actual earnings calls themselves. I'm not sure if it's a paid feature or not, but they have the ability to live stream them. So if you know that NVIDIA is going to release their call at 5 o'clock in the evening and you want to listen to Jensen Huang live, you can do that. And so it's pretty cool. They have other features. I know they have some paid tiers, and they have other features for retail investors as well as institutional investors that have a lot more robustness. They have charts and they have different ways to save things and this, that, and the other thing. But for the manner that I use it in, you can literally save all the companies that you want to listen to calls, and it'll tell you when those calls are coming. It'll give you a warning, like a half an hour before the call goes live or before it's recorded. They'll tell you that, hey, Visa's call is ready to listen to, kind of thing. So you can easily keep track of all the ones that you want to listen to. You can make a wish list, if you will. You can have your portfolio. You can have ones that you want to learn about, so you can track all that stuff. So that's super, super helpful. And I found that the phone works the best. It's okay to do it on the laptop, but I find I get distracted by all the other shiny buttons on the computer. So the phone have found is the most helpful because you can do it like Andrew and I were talking about driving, but you can also use it if you go work out. You can use it when you're going for walks. If you're doing really boring remedial tasks at home or even at work, when I waited tables, if I had something like this to listen to while I was rolling silverware or doing my side work, it would have been a godsend. But, so it can be very, very helpful, and it can help you learn a lot about the companies very quickly. The other tool that I use, which is kind of connected to Quarter, is Fiscal.ai, who we've talked a lot about. They have the Quarter transcripts and calls in the app as well on the computer. They don't have a phone app yet, but that's another way that you can listen to it. So it's kind of all integrated. So if you want to look at financials and do all the research while you're listening to the call, you can easily do that. So that's another great way to access the stuff. I know there's other tools out there that do that, but those are the tools that I utilize by far the most. Are you familiar with any other ones?
No, not for the calls, but 8K, 10Q, BAMSEC's pretty helpful for that.
Yeah.
It's really easy to access and all of that. So that can be a good one.
Yeah. That's a great, go ahead.
Quarter also has, I don't know if you mentioned, you can skip to the Q&A. That's probably my most used button on there, which is nice.
It is nice.
Because if you didn't have that button, you don't know when Q&A starts because, again, there's no template for an earnings call. So some companies will spend 5 minutes on Q&A. Some of them will spend an hour. Right. Some of them spend 30 seconds on their prepared remarks, and some of them spend an hour on them. So, having that Q&A button. Yeah. If there was one feature that is like essential for an earnings call, it has to be that Q&A button.
For sure.
Like full stop.
Yeah, full stop. Yeah, for sure. Yeah. And like I said, companies that really well, a lot of times you're not going to pick up much. You could literally probably read the press release, which I don't read, but you could read the press release and get a lot of the same information and then skip to the Q&A and actually learn something that might be going on with the company.
I mean, that's what BAMSEC helps with. You just pull up the 8K and then it's very scannable.
Yeah.
And then when you do go into listening to the call, then
Right.
you've kind of got that overview right away.
Yeah, for sure. Yeah, that's a great way to do it. There's some old school methods that you could use to gather this information as well. One is sec.gov. That used to be our favorite before Andrew discovered BAMSEC. And it's a little more archaic and it's a little harder to get around, but you can access all that information there as well. Another option is actually go to the company website. Their investor relations page most of the time will have the information that you are looking for. A little helpful hint: if you're looking for, if you go to Microsoft's website and you're looking for the earnings calls from 2020, you may or may not find it. Companies don't store a lot of the back information on there, especially for investor relations reports or any sort of meetings or things that they do in that respect. It's generally only there for a month or two and then it's gone. So just kind of an FYI for that.
Yeah, that's a very good point.
All right, folks. Well, with that, we will go ahead and wrap up today's show. I hope you enjoyed learning about how we approach earnings calls and earnings reports, and you picked up a nugget or two that you could use to help you learn more about the businesses that you are trying to analyze. And with that, we'll go ahead and sign us off. You guys go out there and invest with a margin of safety, emphasis on the safety. Have a great week, and we'll talk to you all next week.